Hello, traders. Kuzavini coming to you from theclosingprint.com, Sunday, the 13th of August, with your weekend video newsletter. This week, we'll discuss the market breadth continues to deteriorate. There are underlying stocks that are showing relative strength, and we'll cover those as well. Once again, this week, we'll start off with a bit of caution and allow institutions to tell us what to do and trade accordingly. Okay, starting off with the S&P 500, RSI started moving lower. We're about 3.5% off of recent highs, with 382 Fibonacci's just below, and stochastics set up perfectly. If we can get a turn here, we might have an opportunity for a bounce. With most traders bearish and oscillators getting ready to set up for a turn, this is the New York Stock Exchange McClellan volume oscillator. Whenever we get down into this zone, we start to look for a bounce. The last time we hit an extreme level back in March, that led to a rally into April. And the last time we turned at this particular level, minus 20, minus 30, we had a bounce here at the 50-day. That's when we started to cross back and stay above the 921.50 and 200-day moving averages. That said, breadth is managing to hold on to this neutral zone right around zero for the S&P 500 in the top panel, mid caps, small caps, and NASDAQ in the lower panel. So if these turn up, there is energy for us to sustain a bounce near the 50-day moving average on the S&P 500. At the same time, NYSE on the monthly summation index of McClellan oscillator values is still trending higher, while at the same time the daily time frame versus the monthly is still pushing a bit lower. So we're looking for a trough. Right now this chart is telling you to be cautious, and we'll see how breadth starts off on Monday. The NASDAQ is sitting right on top of the 50-day moving average. Oscillators are trending lower, so we'd need to see these turn in the short term. It's a good place for it, with the majority of traders bearish at the present time. IWM also faded for a second week with the potential for it to move back inside of this range. RSI is above 50, and MACD continues to trend. Small caps, there's a lot of energy names which did well last week, which could help to keep IWM from fading too much. Also, if biotech start to bounce, there's a large number of those stocks in the small cap Russell 2000. And as you can see with the small cap energy names, PSCE, the trend is up. Any pullback to the 9 or 21 day will most likely get bought. That's where we would like to buy. If you're trending, last week, Thursday, Friday, we came right back down to the 9 EMA. Buyers stepped up. So it'll be interesting to see if we can follow through this week with stochastics a little overbought, starting to pull back a bit. You can see how it's been embedded all during this period where small cap energy stocks continue to improve. In addition, large cap energy, as you would suspect, is also pushing higher up towards resistance. We're looking for that weekly breakout above 92, which would signal potential follow-through and persistence in the trend. You can see rate of change in the bottom has just started to turn. So if this starts to move like it did back here in November, December last year, we could see energy stocks take off for another 20, 30 weeks. All of this depends on what happens on Monday, Tuesday, and through the remainder of the week. We can see that most S&P 500 sectors have been fading, with the exception of communications, energy, and healthcare. So those three sectors would be what I'd be focused on this week if we have a follow-through. Financials have a 3-week tight pattern. If financials start to move higher, That would be a good sign. We need the financials. JP Morgan is being bought by institutions. That was noted by Investors Business Daily this weekend as one of the stocks that were being bought heavily by institutions, JP Morgan, as it pulls back. And Tesla, believe it or not, as they show signs of accumulating shares into weakness. With the New York Stock Exchange, Dow Industrials, and the Nikkei, the only indices that closed higher last week, while JEPI and SPHD closed higher. That's showing you that value stocks are being accumulated into weakness, with the New York Stock Exchange 2,700 stocks holding this level right near 16,100. New York Stock Exchange advanced decline. We would need to see this turn upward. It's currently making a series of lower highs and lower lows. So once this starts to turn back up, we can assume that accumulation is taking over. Institutions are buying. We're still above the zero line with the NYHL, so that's a good sign, despite the weakness that we saw on Thursday and Friday. Finally, there is volatility, which continues to taper off. The front-month VIX versus the 3-month VIX is giving us more of a neutral signal. It did drop pretty dramatically last week from a bullish signal like we had back in late May, which led to the current rally when we hit this extreme and reversed. Note that volatility has been dropping to end the week, as the front month VIX produced a lower high and looks like it could be headed back down to the red zone in the short term. The bond stock ratio is giving us mixed signals. We are extended away from the 65 period moving average. Tried to move higher last week and then turned lower, with the S&P 500 giving us a fade. Blue elder sticks telling us to pause and use caution. We're watching for either a red stick or a green stick to start the week. We had the 10-year spiking higher off the 21-day moving average on Thursday, Friday, with that weakness in Chinese inflation data pointing to the potential for deflation, which would be awful if that continued. It's just something to keep an eye on. But the last time the U.S. economy saw deflation of a significant magnitude was back in the 1920s, 1929, 1930, in the Great Depression. So that's the bigger problem for the Fed to deal with as they maneuver through the current environment. They have to make sure that we don't drop into a deflationary cycle where prices start to drop and consumers wait for even lower prices, furthering the cycle lower. There is a potential for a double top here. The October highs, something we'll be watching for this week. The U.S. dollar is also giving us reason to pause and to reflect. Use caution when the dollar is starting to rally. If we break out of this descending wedge and RSI continues to move higher, that would be a headwind for U.S. equities and international markets that make exchange into U.S. dollars, as it cuts into profits of U.S. companies that trade overseas, like Microsoft, Caterpillar, 3M, etc. As two final caution signals move in opposite directions, copper is telling us the economic conditions are starting to worsen. This is most likely due to the weakness in China and less so in the U.S. However, with this second caveat, we do see crude oil, Brent in this case, moving higher. Look at the volume. MACD, stochastics both talking about a weekly follow-through. We broke above the 50 weekly moving average, which is telling us this trend is probably going to remain persistent. That would be bad for U.S. equities and consumers if gasoline prices continue to climb, which did gap down to start the week and then turn higher off the 50-day moving average. So if gasoline starts to proceed back up to the recent highs, that would be a headwind for the U.S. consumer. The sector heat map, read from left to right. Every week this is updated. You can see across the top. We are starting to turn more red as more sectors see selling. We do have some energy and oil and exploration stocks. That's turning green, as well as pharmaceuticals, healthcare. Last week we talked about international markets also deteriorating somewhat as well, moving from lime greens and yellows to orange, and now starting to show some more crimson in various countries. Note that Turkey is still trending. That's green, looking for a follow through. Energy shows the most relative strength. Financials are hanging in there right near the 21-day moving average. If JP Morgan's accumulation by institutions is any indication, we'll look for some of the financials to move higher this week as well. Industrials also held on, and healthcare right at the 21-day, showing a very bullish candle, while consumer discretionary moved back to the 50-day. Look for a bounce in consumer discretionary. If you're bullish the economy, you want to see consumer discretionary outperforming consumer staples. With that in mind, as consumer discretionary outperforms consumer staples, these lines move higher. You can see back in 2022 when the bear market started how institutions began to position more bearishly. We rolled over and consumer staples started outperforming. That's the opposite of what's happening right now. So even though we did fade back to the 50-day moving average, just keep in mind there is some underlying accumulation as most traders get bearish. These stocks that are listed below on the IBD 50 and IBD 50 stocks showing relative strength, trading at new highs, or stocks that are being accumulated by institutions like JP Morgan and Tesla, all have one thing in common. As price action trends higher, RSI remains above 50 and stochastics is near oversold and turning or trending higher to end the week. As you can see with Arbor Realty and Arch Capital, ACGL, holding above the 50-day, looking for RSI to turn up. MACD is about to turn as a function of price, and stochastics oversold. So all we would need to see is stochastics turn up like it did in late May to give us an opportunity for an upside rally. Apollo Global Management sitting at the 21-day could pull back to the 50, watching RSI and stochastics. Stochastics about ready to get to oversold and turn, so it's a bit early. Potentially we would see maybe a day or two more of this selling that we saw last week starting on Tuesday. But the thing I'm watching on all of these stocks for this week on the IBD 50 is a stochastics turn from oversold. Caterpillar is another stock, is trending nicely around the 9 and 21-day. Remember, the XLI Industrials was holding on to the 21-day moving average. Stochastics oversold, potential for that to turn up along with RSI. So stocks like Caterpillar have a potential for this bullish trend to continue. Financial stocks are also needed. If we are expecting a bounce at the 50-day, the financials need to participate. JP Morgan was noted under accumulation by institutions in an article by IBD. We're looking for this to follow through off the 21-day. RSI's turn back up. Stochastics oversold. So if this turns, and we see the other banks like JP Morgan, PNC, Goldman Sachs, Wells Fargo, and Citigroup all turn as well, that would be a further indication that institutions intend to bounce at the 50-day. DraftKings also showing some relative strength on Friday, right at the 50-day moving average, RSI turning back up, volume picked up, and stochastics is oversold. If this does turn, like it did back in the last week of December, which led to a very nice trend higher, we'll look for stochastics to turn and give us that signal. Watch MACD as well. That'll turn as a function of price. Look for volume to pick up. That would indicate institutions are buying DraftKings. Interactive brokers, IBKR, trending along the 9 EMA. We have RSI rising, volume showing institutions have been accumulating shares for the last 3 weeks, and stochastics, though it's not oversold, did turn back up. MACD is trending. Kinsale Capital, this is an insurance broker. Stochastics oversold and turning. MACD will turn as a function of price. We're right at the 50-day with these wiki candles. On Friday, we had a long-legged doji or hammer. As we look for more insurance companies to continue, here's AIG, American International, right at the 50-day. Stochastics fading, looking for a bounce, but it is trending. Along with Prudential Financial, looking for that to bounce as well. Stochastics heading to oversold, so it's probably a day or two away from testing the 200-day. I would look for a level there to hold and look for institutions to start buying. Bottom line, this is all telling us to be cautious, start the week. Let's see what institutions do, and we'll act accordingly. Qualsys is in the business of internet, cloud, and security. That reported good earnings on the 3rd, I think it was. They beat. Look at the institutional volume coming in. It's a fairly low volume traded stock. I like to see stocks that are above 200,000. This one meets that criteria. We're looking for a follow-through, stochastics turning higher, and RSI embedded showing muscle. So look for the next dip to buy with a stop underneath, and for QLYS to continue higher off of a beat in earnings. United Rentals, another stock that is trending, economically sensitive, construction related for the most part. Seeing some volume here, watching for a follow through. RSI is near overbought and stochastics is overbought. Just a final note, just watching this one. Economically speaking, we saw copper dropping off, a further indication that China might go into some deflationary environment, which could affect some of these big industrials like Caterpillar, John Deere, etc., that sell products overseas, along with a rising U.S. dollar. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on Sunday, the 13th of August, with your weekend video newsletter. Keep an eye on these stocks that are in the list below. We'll send out a watch list later tonight around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, have a great weekend. What's left of it, take care, and we'll see you in the morning. Ciao.